Good evening, this is Ken Long from Tortoise Capital, and this is the daily debrief for January 2nd, 2018, as part of our advanced swing course for 2018. I want to start with a review of EWW Mexico. That was prominently featured in our weekend report review. We talked about why it was such a favorable trade for us, and a quick review if you didn't catch that is that Mexico and Latin America were the by far worst performing symbols over the last quarter, featuring a long sell-off on leg one here in EWW that we were able to get 3 positions in before covering when the MACD histogram ticked up. We tried a long which scratched. We got a fractional gain on a second short, a continuation play. But then at this key location around 49, instead of failing further like it should, if it were to repeat this, we actually got an entry signal, so we get long in here around 49 and some change. Our target on this one was back to the RL270, the long-term fair value, getting back into this position here. So we consider that stretch from the 270 to the peak excursion, either here or there. That's how much more it can go to the upside. So we could see this thing get all the way to 65 over the next, say, 3 to 6 months. So this is sort of the initial swing trade position, which now means that if this is our core position, we can start playing this as a turbo and looking to add to any successful gains intraday, and then use that intraday momentum as part of this swing narrative that's developing, and that allows us to leverage the information that we have about the market condition and the sector condition. So now shifting to an intraday view of EWW, this was our trade this morning. There was an initial gap up, lots of volatility, so we wait. It still is above its long-term RL270. It gives us a bottom recovery, a higher low, and then a 1, 2, 3 entry. And this occurs while the MACD histogram, so now we're 30 minutes into the day on 1-minute charts. We're 30 minutes into the day. We're above the zero line. Instead of failing where it should fail to go back and close the gap, instead we get a 1, 2, 3 entry, and the signal line crosses back over the EMA 5, and that gives us our permission to enter, 1, 2, 3 entry. And the rest of the morning was this nice slow grind. We added a second position up here around 49.95 when it takes out the swing high of the RL10, and then this is a nice grinding bull, and everything is staying well above the zero line here on MACD histogram. So we like EWW. So this is in addition to the core position that we have for the swing trade, and you can see with an entry around 49.65 and a swing low of 49.55, that's really a 10-cent operational risk. Pick whatever position sizing you want, but an entry around 49.60 and you're holding 49.90, this is 3R of execution risk, and so that should be at least 1R for you if you're using the 1/3 rule of execution risk versus position sizing risk. So that's an absolutely routine hybrid frog style entry, MACD histogram style entry, a pattern 4 for those of you playing along with the RLCO pattern with a set of higher lows, and entered in the usual way. So this is a case where the swing trade core and turbo is paying off for us. Now, just to complete the thought on the turbo position here on EWW, looking at the full day, this was that initial entry around 10. When the RL270 crosses above the entry, that's when I like to get to no lose plus dinner for 2 and maintain that here until around noon. And we have this breakout from a Z3P pattern and starts taking off. I like to ratchet that up. After this Z3P pattern and finds higher support, ratchet it up, ratchet it up, ratchet it up, and then take off the turbo position going into the close. And this is an exit around 50.30 on the turbo. So with an entry around 49.60 and an exit around 50.30 and some slippage, that's really 70 cents on a 10-cent initial execution risk. So that should be at least 2R in hand from an absolutely routine entry in EWW. Now that 2R can be used to fund the market risk for the overnight position for the swing trade, and this is one way you can get your initial risk capital out of the market. So that's an example of the core and turbo. The next core and turbo I want to look at is from XIV. We have been trading that all year on a swing basis. It's been a great swing trade. This was a harsh sell-off into the close, followed by a little gap up and a resumption of the upward pressure. So now we have that MACD histogram rolls up, crosses the zero line here. We've got our initial hybrid frog risk. Anyway, this becomes our routine entry here with our stop down here. When the Bollinger Band mean crosses the RL270 and crosses the entry, I like to get to ratchet that stop up, still comfortable, get a second position here. Instead of failing here, it took off, so we add a second position. At this point, I ratchet my stop up. Now when the Bollinger Band 2 crosses the RL270, I'll move my stop up here and then just trail this with the Bollinger Band mean. So now we're two positions well in the money with entries around 135.50. Now we're holding almost $2, maybe $1.80 on the first position and about 50 cents in the money on the second position. So that's giving us coverage to protect that swing trade position. So core and turbo once again on the usual suspect. Now this is an example of a chat room in action. There was a question around 1 o'clock in the afternoon from Daniel. Do I have an opinion on gold? It's gone straight up since I bought it, and I'm conflicted between pulling a Zeno stop, which is taking the exit on hesitation when it has achieved your profit target, versus letting the trade cook some more. Pardon my stream of consciousness typing here, but so this is a good problem to have. I want you to compare the performance against other symbols using the same pattern. By that, I mean, where is it in the life cycle of the pattern? How much has it gained compared to other implementations of this pattern to determine if you are truly in an abnormal gain, or if this is the expected move, or if there's still more room to go to the average return. In other words, does this represent an abnormal gain in the time frame of interest compared to previous performance? He's up about 7R on his option position. I said, also next, consider the psychological elements of how much does it hurt to give back $1 of gain versus how much it could hurt to see it go up $1 if you got all out. So this is part of managing your emotional bank account and looking at greed versus fear, regret versus disappointments. If I give back $1 a gain, that means if I held it and then it went against me and it pulled back $1, I would have to compare that decision, which realized $1 lost, versus the initial desire to get out right then. So how bad does that hurt? And then compare that to the pain that you would feel if you did get out and then it went up $1. And then you'd be suffering because you're missing out on that gain. Which one of those two scenarios hurts more? Psychological studies show that these are not symmetrical feelings, but that this feeling varies in people, and it is a function of where they are in their emotional setting and in their goals, and how much of a portfolio percentage this reflects. So there's a lot of psychological conditions going in here, and since that's going to be the emotions we have to process for that exit, it's important to document those so we can start to normalize and apply some discipline to these feelings. I then suggested consider the framing the trade as if you bought it today, and make an evaluation of reward versus risk going forward to determine if it would qualify as a hold, and ask the data entry. And then all of these things are adding information to the answer of the question what to do with these excellent gains. Because we're thinking about exiting, that should also be a time to consider adding to the position with market's money because it feels uncomfortable. That turns out to be a signal for times when extraordinary moves can occur, and they can still continue as much as it can go against you. So we want to make sure that we look at both sides of the trade. When I feel like I might want to be exiting, I force myself to say, let me frame it in both directions and see what the other side of the trade looks like. Why would somebody buy this from me if I was trying to get out? What do they see that I don't see? In other words, is this current gain, which feels unusually good to me now, could this be a trigger to take action for traders on the higher time frames who look at this gain as simply the first leg up on their time frame? So in other words, get out of the habit of just staying locked into your own time frame. Go up a time frame. Does this now look like a breakout signal that would tempt them to come in? In other words, it was a non-noise move for them, and there could be two more legs of this size. So that's why we want to frame the trade in both directions and vary our time schedule. I also said, what's the largest adverse gap in the last 200 days? If you experience that, would that cause you to immediately sell to protect against further losses? He wasn't sure. This now gets us into asking standard questions in order to frame these trades. So let's take a look at the gold positions and see what we may see. So these are the thumbnails. We click on those, it leads to the full screen. So on the long-term trade frame, so we're going back now to November 16th. This is a little over a year. I see this big yellow box as sort of the normal range of gold. We see the fair value of the 270. It's been a positive leg from about here onward. That's where it turned. It was going down and now it's rolled up. We can see the oscillation of the 10-period regression line, the trader's price. Nice big move. Found support, didn't fail further to the bottom, but then resumed. Now his entry was around 120, which is an excellent entry. It's a little bit later than the 123, but still a great entry. You're buying on the value side of the RL30, so we can think of that as fair value. And if the move from the bottom of the RL10 to the 270 is one chunk, then I think it's reasonable to speculate that it could move one of those boxes north of the RL270, so that would put it around 128, 129 if this position here, which is the one we're concerned about, in other words, keeping those gains, that it could get to 129 reasonably, which it has done before. And the last time that it had that excursion above the 270, it went 2 boxes, and that's how high it got. So I see strong resistance at 129, leading all the way back over here. I like the fact that this is testing this upward resistance, but if it fails here, it can easily go back to 105 because it already has. The last time it did it, it fell from from 125 this far. It fell here. It fell here. It got one bump up and fell. So a failure at fair value would not be surprising. It failed the last time and it pulled all the way back. So if he lets this come all the way back to find support at this level, then he will have given up all these excellent gains. So now we're starting to calibrate our time frame. I want you to notice the Z3 pinch down in here on the MACD histogram, the fake down, and then the move up. We're going to see that signal, when it crosses back over and re-enters the river, these become excellent places to enter, maybe even a little better than the 120 entrance. And then when it crosses the zero line, and then when it exits the river, that's going to be excellent places to think about adding. So when it has just crossed the MACD histogram, we are just beginning to have a long bias once more, because this would give us a short bias. This is now information that the long bias could occur. And then if you look at those times when it did cross, the signal line did cross the zero line after a dip down, you can see it went from 118 all the way to 125. So that length of the move is bigger than this move. So there is reasons to believe that it could get to 128. Let's take a little bit a tighter zoom in now. Now this is that what was given us the negative bias, that it started here and lasted all the way over there. So his entry around 120 is still very good. We could say the crossover of the signal line on MACD histogram could get in as early as this. This would be a 1, 2, 3 entry, but still 120 is an excellent entry on the value side of the Bollinger Band mean. Where it crosses the zero line, the signal line crosses the dotted zero line is here. That would be the time to efficiently have a long side posture, and you still have a nice 5-day move in here. This is the amount of stretch that the last time it stretched above the RL 270 was from the 270 to the 10. That's the length of one pulse, if you will. It didn't quite fall that far before it reversed and went up, so that gives us some favorable information for the long side. And then a move above the 270 could get this far without being out of proportion to previous moves based on supply and demand. So that's why I'm thinking 129 is at least a reasonable upside. If it only gets up to the previous RL10 high, then it can still get to 129, which is the argument for why buying this, if I had to buy this position today, what my upside target would be is 129. The reversion back to the mean is not unusual. A test of the swing low would not be unusual. And those moves would, a move to the Bollinger Band mean would not invalidate the upside, but it would certainly give back 3/4 of the gains he already has. So I'm already looking at this one as an opportunity cost. That we've got a brilliant entry in that 7R, and that's an unusually good move, especially after all this chop. Don't let this go to zero, and don't give back most of it. Keep most of that play. Now, in terms of the opportunity trade, what I suggested was that the maximum upside reasonable gain then in the next 2 weeks is $3 or $4 up to 129, and you've captured most of the outside gains. The MACD histogram just crossed the zero line, which is favorable, so I think what we've seen could be leg one. I think it is leg one. But remember that there's an opportunity cost, that when you're holding money in GLD, then you're not putting it in outright winners like U.S. Steel and Metals and Mining, which I think are more attractive going forward. And so a decision to hold GLD is a decision to not redeploy that money elsewhere. And so that could be X or XME or EWW, as we've already seen from the swing core and turbo position. I like that one better because it's earlier in the life cycle and there's more easily seen upside. And so now we'll take a look at XME as a series here to show you what I mean. So this is a daily swing on XME. And so what you can see is, again, the same pattern where we have a Z3 pattern and the first breakdown fails down into here. This actually corresponds to our OWL entry, which also lines up with the MACD histogram crossover after it's gone beyond the Z2 and crosses back up and over. This is actually an OWL entry on the swing, and it's below fair value. And it just, this is where the signal line enters. This red lava river here, that's a reasonable entry. Where it crosses the zero line is here. That's a reasonable entry. Where it leaves the river down here, this is a reasonable entry. Now, I want you to notice this position here. Instead of failing, it finds support and continues. So now you see the signal line does not cross back over the MACD histogram, but instead where it could have easily and routinely failed, it didn't. It resumed. So we see that as a pocket. And then when it clears this Z2 line and the previous support or resistance level of this RL10, this is where a third position gets added. And then on a money management basis, you have to add the fourth position on the resumption of this move here. Now, what I want you to notice is that all of these swing positions are building on each other, and every one of these is an opportunity to use the turbo technique on a symbol that is outperforming on a swing basis. You get all of these directional candles in the direction of the swing signal. Look at these. There's no noise. It opens low and closes high at the end of the day with a strong intraday directional move. So when you now get a move like we're going to see here in a minute, this large range day turns out to be an extraordinary intraday move. So let's take a look at how core and turbo worked with XME. The point I'm making with Daniel is that his decisions about keeping money in the gold position is a vote to not put that money into other opportunities that certainly are paying off as well. So you must consider the opportunity cost, and that's why in my discussion I want him to think like Walmart in inventory management. I want to stock shelves, in other words, hold my portfolio with things as they're going into season and then sell into increasing demand and keep buying with advantage. And I want to cycle that inventory between positions with lots of turnover. So I like to get things at this point where I can buy quality on sale and then get back to a reasonable fair value, which is what all the people that are now buying this are looking to get back to. And then the stretch below fair value is equal to the stretch above fair value. So this thing can get all the way to the top of that chart, and I'm buying it with advantage in here on a swing basis, and then using the intraday moves in my direction to get turbo positions on with low risk. So now we're looking at the long-term daily charts on XME, and I want you to notice how the different oscillations that we see in this Bollinger Band 2 river, from Z2 to Z2 to Z2, finds support and continues for another excursion. If that's the size of the move from Z2 to Z2, and it didn't fail, this becomes pattern 4, re-entry, and then it gets back to the long-term fair value. And now we get this little oscillation, and these are all tradable. Look at that, 9 or 10 days of directional moves, XME metals and mining, geared to the business cycle, strong commodity basis, amazing. And then this oscillates into a Z3P channel, and then we play the breakdown in the usual way back to previous support, where it finds support, and owl entry lines up with the Z below the dotted line, the signal line. Get the MACD histogram crossover at a Z2 and at Z-1, and crosses the line. So all the way through here, there are multiple signals for swing trade patterns using the RLCO framework and the simplified MACD histogram. You have to get long here where it crosses the line, crosses back over the Bollinger Band 30 when that signal line leaves gets above the zero line. There's a pocket entry. There's a second pocket entry. And now you get this extraordinary move. Those 3 days never even tempted the signal line to fail. And then now you're in a critical state here on last Friday, that you have this amazing move from 29 to 36 in metals and mining. Now, if it fails below the low, you want to get short, and your targets are the Bollinger Band mean and long-term fair value. Or if it breaks out above, you want to get long and just continue to ride this wave. So how can we do that? Well, we can use intraday turbo techniques using the hybrid frog in the usual way. Let's take a look at that one. First, just let me zoom that in just a little bit more carefully now on more of a typical swing setup. Put about 3 months on there with daily charts, and now when this signal line crosses the zero line, that's when you can get short. And if you didn't get short in here, this breakdown below the RL10 is the collapsing dragon. Now you can be short here, and you can recover on a 1, 2, 3. You could cover that at the doji and get long at a 1, 2, 3, where the MACD histogram uptick and crossover happens, where it enters the river, where it definitely crosses the river, where it crosses the zero line. This is where you pick up the long side bias, is when that signal line crosses the dotted line. This is where it emerges from that river. This is a place where it could have failed back to the Bollinger Band mean, but didn't, so you get an uptick. This is a pocket entry or pocket re-entry. You must get long not later than this, because you already cleared this previous resistance. So even if you're getting along at 33.5, that's fine. Now, each of these are stretches to the upside. So here's one chunk. Now, when we get to this last little piece, so now we had 7 or 8 days of uninterrupted joy, then a sell, gain, and a sell. So you might look at that as a critical state. I do. If this fails, it could come easily back to this resistance level, which could then become support. and that would negate my entire gains from this entry here. So I have to protect against that, and that's why you could see some more stops being hit. And that the fail from this could be very large. And you can see you can get 5 days in a row of selling. Not unusual. But instead, what we get is a great big signal move, strong vote up in XME. You ought to see the move in US Steel. It's double that. And that's a big component of XME. So let's take a look at the intraday. So there's a gap up, sells off there. Now at 30 minutes in, we have a low and a higher low. And now we're 20 cents off the intraday low with a higher low. That's pattern 4. So we get long with a stop below the swing low. When the RL270 crosses my entry, I like to move that to no lose plus dinner for 2 and just leave that in place. At this point, we've had a nice surge up and a pullback. I'm locking in gains. Keep that in place. It's found this surge in a pocket. I probably should have added to that position. Lock that in. Long Z3. Starting to leave the river and going to the upside. Should have added a position. Lock that in. Keeps going up. We're getting close to the end of the day. Lock it in and exit. And so now you have an entry from around 49.60, covered at 50.30. That's 60 cents. And the frog box on this is like 15 cents. Correction, that was the relook at EWW Mexico, but the pattern is so similar that I just want you to know, once you get used to trading this pattern, you can just keep trading it. So this is the metals and mining, XME. So a gap up, higher lows. This is a 15 cent, 20 cent hybrid frog box entry. Stop below the swing low. This is a range stat move. This is a full frog box, by the way. That's the normal position sizing trade. This is the size of a range stat, the maximum reasonable intraday move. Today was a two range stat move. So on an initial risk of about maybe 15 or 20 cents, with an entry around 36.70, you get 37.70. So that's $1.20. That's 5R on one position. So when I'm looking at those recommendations about gold, I take into account that the decision to hold gold is a decision not to deploy money into this. So metals and mining, an excellent turbo trader, an excellent swing trader, and part of our live portfolio. I want to shift real quick, with your permission, now to the daily report. Just take a quick look at. So we're going to just take a quick look at today's report from a swing trade basis. Still bullish normal, overbought and overbought. Volatility still favorable. XLP would be of interest here on this, because it's channeling. It's a 5 days down and a triple screen. Still got a couple interesting targets here in the auto framer. No fires in the among the big indexes for channeling and overreaction. Utilities and real estate were down today. Still test out well with the auto framer. Here's XLP channeling 5DD and triple screen. It was down 0.6 today. The losses in VXX minus 3.5. That's why XIV was so excellent today, 3.2%. Brazil was 3. Metals and mining, the big winner of the day, 3.7. And look at all that momentum, outperformance in all of the long-term time frames. I mean, how hard do you have to look? Pinch and stretch report, still Caterpillar, metals and mining, big winner. Here's EWW recovered from its negative Z stretch today. The most expanded pinch boxes, these are the ones that have had the longest, strongest moves. These are the ones that are very tightly compressed in the pinch box. That's the width of the river. Notice that Brazil's positive move today made it no longer pinch. It is beginning the upward stretch. That's the beginning of that early move, so I like that. Auto framer standard symbols to look at. with their reward to risk ratios built in, and then all the mechanical price levels. We'll talk about more of that later. The fractal regression framework, the green symbols in the top shelf here are the deep value plays. So GE, Merck, Coke, Johnson & Johnson, McDonald's. The most numbers of ATR below their long-term fair value, and then the ones in the red are the overheated ones. These are the ones that are the most numbers of ATRs above their own long-term fair value. Chevron, Home Depot, Caterpillar, Cisco. So still plenty to choose from. Where we are in the daily move. So the regression channel is up. Pocket re-entry today. Market has cooled off a little bit in terms of that RL30 stretch. Has now come back to a comfortable level. There's been some basing action the last 10 days. I still think this market is prepared for the next surge of markets money to come in, and I'm prepared to get that swing move one day at a time using a savvy combination of core and turbo with my leading candidates, and taking advantage of the intraday moves that are in my favor and managing that risk on a very careful basis. So we're about 30 minutes into it. That's plenty for today. Take good care. We'll see you in the chat room. I encourage you to consider signing up for the advanced swing trade. We're doing it online with these daily debriefings. Still time to join and study at your own pace in small groups. So take good care, and we'll see you in the chat room.